Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of October 27th, 2025. Let's get started. SEAF signals for this week. We retain technology, pick up healthcare and consumer staples. As you can see here, relatively high scores on the overall rankings. Not meaning lacking any conviction per se, but not having that true strength, true leadership here out of any of the particular three. You can see that here with energy and industrials being 1 and 2 on the trading week. Utilities 2 on the tactical month. Obviously a bit with a bit of a header on the trading week. The only real conviction we have is financials with 11s across the bottoms, with the bottoming of overall 33. Into our heat map for this week. Like I said, healthcare overall showing some strength here. It's 1 in a tactical month, 2 in the strategic quarter, a bit weak. As you can see, it's a light green here, which means that accumulation that we're starting to see pick up in healthcare has not made it up through the quarter yet. Strong accumulation for technology in that quarter, 3 and 9 on the trading week. We'll take a look at the rainbow chart in just a minute. Consumer staples having that nice positive skew that I like to see from 8 to 4 to 3. Utilities takes a little bit of a header. We're going to take a look at energy and industrials and see what these trading weeks are doing for them overall, but with weakness and lack of accumulation of any assets whatsoever in the tactical month and the strategic quarter. And last but not least, financials kind of sitting here at the bottom. My favorite chart. So this is the sector total AUM of all 11 sector spiders here up top with my handy dandy 21-day moving average here at the bottom. And below here we have a price chart of the S&P 500. I see noise here in this particular chart, but as we can see here, we are accelerating off the 21-day moving average, nearing all-time highs, close to $340 billion in assets between the 11 sector spiders. We've seen, obviously, we crossed down to the 21-day moving average twice, went a little bit sideways, and we're kind of off and away now. Things are looking positive overall for the S&P 500 when we look just at this chart. This isn't magic or this isn't predicting anything, but we'd like to try to find multiple indicators that kind of give us the overall direction of the market. And as of right now, assets are flowing strongly into all 11 sector spiders. I mean that collectively, obviously, as I mentioned before, we have some outflows in our lowly financials. Heading into our rainbow charts. Speaking of financials, let's get the bottom out of the way first here. Financials at a deep avoid. The deepest of avoids, a 33 overall ranking score, which is the worst you can get out of the SEAF model. Really been in a downtrend since May of this year. So just really straight down in the relative outperformance versus SPY. We had a little bit of brief interludes here. We picked up slight bits of our performance, but overall strong downtrend in financials that looks a bit to continue. These are all fresh lows within at least the last calendar year for financials against the S&P 500. Remember, this bottom chart is a relative performance versus SPY chart. So we're going to continue to avoid financials for now. Energy showing a bit of life as it has been over the last year. Heading up into mid-neutral with a strong trading week. 1 on the trading week. Actually, give me 1 second. I forgot my numbers. Let me go back real quick. Heading into our heat map. 2.4% up on asset flows for the last week. All 5 days were up. So we saw increases in the assets under management for all 5 days. As I mentioned, $339 billion as an all-time high. Though any one individual sector didn't blow it out of the water in terms of the way the velocity money we calculated in the trading week. Energy at 0.18% on the week, which was the high. But we did have multiples in the 0.10, 0.10. So that increase overall, as I mentioned, we saw growth from the sector spiders was really kind of not evenly distributed, but close to evenly distributed amongst the top 6. sectors here. So we didn't have any particular inflow blowout. Why does that matter? Going back into our energy, we see a little bit of moving up into neutral for energy after having 9s and 10s on the tactical month and strategic quarter. We see a little bit of relative outperformance, but here we're near the bottom. And again, as I've talked about energy a couple times here, we get these little spikes up, positive relative performance spikes, and then nothing is sustained. Is that going to be how we continue moving forward? I don't know, but I can tell you that 0.18% on the trading week as the top flow isn't super high conviction from the way we're tracking these flows. And again, would really need to see us not only get into favored, but sustain some favored for energy to make a run. As you can see here, we've had little bits of where we jump into favored, we get there for a little bit, and then we're right back out. Overall downtrend energy, but it is on the rise, so watch this space. Technology. Technology coming in with 9 on the trading week, but overall decent score. With an overall score of 13. Not as good as technology has been, but technology has been on quite a run, and we tend to see some of this kind of happen. We're a little bit inflection point here with the broader market. Market's up 60 today as of this taping, but technology really strong relative outperformance versus SPY, sitting a little bit lower favored, but still trending upward. Technology looks to be a good place to be, and it's had quite a good run. So whether these asset flows were a little bit of profit taking from last week, but again, overall strong things from technology. Technology still continues to look good. A little bit of waiver in the overall ranking. Industrials. Brought up industrials here because it was 2 on the trading week. Now, again, 2 on the trading week was 0.10 this week, so not a real ton of momentum into industrials, but a 2 is a 2, brings us up into a higher neutral area. We are seemingly sitting on support here on the relative performance versus SPY, kind of really sideways move here, going back into late August, early September. Nothing yet to do here in industrials. We need some sustained couple of weeks in a row to really push this thing into favored to kind of get that nice relative performance. Industrials moves a little bit slower here. We kind of migrate slowly into favored and then migrate slowly out. We have a little bit of sustained here. Kind of a sideways trend really going back to March of this year overall. Really sideways since September, late August, September. Again, keeping an eye on this space. I like the positive momentum for industrials. I like to see that as we kind of go from red to yellow into green. A nice dark green here would cement that. A little bit of muted-ish green here this week. But, industrial is another place to kind of keep an eye on. Not a SEAF signal this week. Consumer staples. Consumer staples is a SEAF signal this week, brought together by a 3 on the trading week and a 4 on the tactical month, eking itself into minor favored, showing a little bit of love here on the relative outperformance versus SPY over the last week or so. After a real long downstretch of the relative performance. So what could this be? Could this be a bottom? Could this be an attempt to say, hey, that relative performance versus SPY has kind of gotten too separated? I don't know. But seeing a little bit of life here on consumer staples after a bit of a down run. Again, Knight would really like to see some strong flows coming in. 0.1 on the trading week. 0.14 on the tactical month. Really haven't seen that accumulation yet. And when we really start to see that accumulation of assets over several time frames, that's when we get into upper favor, and that's when we really start to see those relative performance numbers jump. As of right now, like I said, slight uptrend going back to very, very slight uptrend going back about a week. Overall, still in this big downtrend in relative underperformance versus SPY. Keep an eye on consumer staples. It is a SEAF signal this week, and if we can sustain any of these positive flows, we can kind of eke our way up and potentially make a little bit more of a run here. Our leader for this week, healthcare. Healthcare comes in really strong on a tactical month of 1, where it's really shown some accumulation, seeing seeing a 2 on the strategic quarter, seeing some positive things out of healthcare. Healthcare has kind of been in a pretty strong downtrend, really going back since April. But if we extended this out a lot further, going back a year, over a year, we'd still see kind of a downward trend here. Nice positive trend going back the last week and a half, and seeing some good things out of healthcare. Broke through a little bit of this relative performance resistance that we were seeing, sitting up into mid favored here with I think overall score of 8, which is pretty good. Things looking good for healthcare so far. SEAF signal for this week, and again, as we can sustain these flows, really kind of healthcare's been beaten up a lot over the past year and a half. So if we can get some sustained flows here and can see some positive things coming out of healthcare, that would be great, as it's a SEAF signal. That is all I have for this week. I look forward to breaking down the SEAF model with y'all next week, and thank you.